presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to John in Austin, Texas. Hey, John, what's going on?
Hey, buddy.
How you doing, man?
I'm so good I can't stand it. How about you?
Good, man.
God bless you. All of God's best to you and your family.
Wow.
You teach us how to make money. You are such a man of integrity and honesty.
Right.
I so admire what you do in your show, and you just deserve a whole lot of credit. And the other thing is you would be hard-pressed to invest in something that's going to bring you a better return than that gold report. It is fantastic, buddy. I just so appreciate you helping us make money.
I appreciate it, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Let's take a look at one of our Believe cards. This is by Albert Einstein. It is better to believe than to disbelieve. In doing so, you bring everything to the realm of a possibility. Market-wise, let's take a look at it out here. We had the Dow Industrials down 102, NASDAQ off 6, S&P's down 7. Gold contract up $1, trading at $1,261 an ounce. Silver up 32 cents up 3 cents rather, at $19.20 an ounce. Platinum trading at $1,482 an ounce. Oil up 11 ticks at 104.46 a barrel. Bonds, we had the 10-year up 3 ticks at 124.03. The 30-year up 3 ticks at 135.01. King dollar down 31 ticks at 80.81. The euro down 18 at 135, and the yen trading off 31 at 102.04. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Realistically, you get a flat market out here on the S&Ps. Did 521 million versus 557. If we go over to the SPY, this thing wants to edge up just a bit more in the SPY. We're at 194. You got to 196 yesterday. The ABC structure is 197. What the SPY did do subliminally today is that you had an expansion of volume as you got into this lower price. So it's going to be interesting to see, can it get into 194.65 first and you get an expansion of volume. Intraday out here, what we did get is that you got an ABC structure on the way down in the future market. And the price target was 1936. You got to 1938.50. What it had done is at 1400 hours, it broke the B point, did it with volume, and you got the expansion on the way down. Went topside once again, and then right at the close, you had a large seller on the S&Ps at the close, a very large seller, actually. 98,000 contracts was thrown at the S&P at 10 minutes of 4. NASDAQ Composite. We take a look at the Composite. What you have with the Composite? Another sideways move. She's down $6. We did 1.7 billion versus 1.7. If we go over to the NDX 100 and we take a look at the NDX 100, flat market. Creeping up, dramatically lighter volume, once again, 20 million shares. The way that the Qs are set up is that their ABC structure has higher price by quite a while, too. Now, the small caps, this is where it's going to get interesting here. Small caps finished their ABC structure on the way up. You pull back slightly today, only 29 million shares. We had hit a high with 49 million. Small caps need more volume than that. But what the small caps haven't done, number one, is that they're still the weakest indice. We'll see how they try to get into the gap that was still open here at 114.88. Gold contract. We go over to gold. We take a look at gold. What you had with gold out here today, we did 73,000 contracts. Yesterday was a nice day. You turn around, you did 107,000. Gold is building cause, folks, to try to get back inside the 1263 area. We got to 1265.50 today. Couldn't hold that area. Some of the gold equities, though, however, had had juice inside them today. We had some volume inside of them, which is a great sign. We go take a look at the silver market. What we have with silver. Silver is at 1920. She is back inside the range. We did 39,000 contracts. Silver basically has had more contracts than gold as to what you're going into. And as long as she stays inside the $18.95, that is the higher range. Bond market, we go take a look at bonds. What we had with bonds is this. TY, we look at the 10-year first. 10-year bond out here. We rejected lower price today. You did it on lighter volume. We are at 124.03. I suspect that's going to be another ABC structure up, and this one's going to bring it somewhere up to the 127 to 128. The last high that was generated on the 29th of May was 126. The 30-year bonds, same type of setup in the 30. Rejected lower price, did it with lighter volume, did 280,000 contracts out here today. That 280 was going into 439. Last high that was out there was 138. 10 in the bonds. This, if it is in fact an ABC structure on the way up, which the bond market, folks, has done multiple ABC structures on the way up, that would bring the bond market up to the 142. Now, if we go over and take the continuous contract inside the bond market, what you're going to see, and this has been crawling up here for quite a while, is that at the 141 to 142 level, this is going to be the make it or break it baby. And what that is specifically is this. That's ice. It's, you know, so when you get a bounce that's going up to ice, that's a normal bounce even in a market that wants to go downtown. Now, the way bonds, here, let's go over the whole structure. So bonds topped out in July of 2011. We go straight down from 153 down to 127. At the beginning, well, for the last year and a half, everyone suspected that rates were going to go dramatically higher. Bottom line, rates have been going lower since December of, so 6 months right now, rates have been going lower. Because of the way that we came down, up to the 142, that would be a normal bounce, even in a market that wants to go down. So that would be your bearish case. Your bullish case would be you're coming into that area, you have force coming into that area, and in fact, it's going to be another ABC structure on the way up. The way it is set up right now, we've already done multiple large multiple ABC structures on the way up since January. So we'll see how we hit that area. King dollar. What is King dollar? King dollar has it in spades. And what King dollar has done is this. And if you can get anything out of how the dollar reacted last Thursday and the euro reacted last Thursday, you'll really get to understand that if you take a swing point out with volume and price doesn't hold, you're going to go right back up. What do? That's exactly the way this baby has pushed it out. Last Thursday, when Draghi came out with the rate cut in Europe, the dollar had traded all the way up to 81.06. You did 53,000 contracts. But yet, it couldn't hold price. It closed at 80.34, which is, by the way, is a huge move in the currency market. What ended up happening where we are right now, we're at 80.91. You know, so it basically has 16 ticks to hit that baby. Had an expansion of volume again today, so the dollar's being really deviant. Really deviant. You know, it's flat out here today, but guess what? We crawled up. We did 25,000 contracts versus 19 tomorrow. This thing's going to blast into this 81.06. We go over to the euro. We take a look at the correlation inside the euro. Same deal. The euro right now, folks, last Thursday, the euro had traded down to 135.03. We got to 135.22 today. Bottom line, you're going to see the euro go down into that level number one, and this is where it's going to be really wild. You break the 134.77, and what you'll see is that the euro will be trading into that 130 area very, very quickly. Huge quickly. Out there last night. No, check this out. This is intense, okay? I'm sure you may have heard Eric Cantor lost the primary which has never happened, by the way, folks. It has never happened that a majority leader has lost the primary. But that isn't what the story is, right? Well, that is the story in itself, not paying attention, that's for sure. No one was paying attention, evidently. But check these numbers out. This is pretty intense. The number spent was $5.8 million versus $200,000. $5.8 million versus $200,000. The number of ads generated was 1,038 ads Cantor had, and the guy that beat him only had 65 ads. Now, what hasn't happened yet, and this is why I'm bringing this up, Fannie Mae and Freddie Mac, folks, are on the table now. And Fannie Mae and Freddie Mac, FMCC, they didn't move today. But when I come back, I'll tell you about this, because the guy that very well could be the new majority leader, he is the head of the House Financial Services, and he wants to can Fannie Mae and Freddie Mac, and it's his bill. We're going to come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. RH, Restoration Hardware. What a little rocket ship this is, folks. Okay, so RH, this she is. 1 second. RH Equity. Okay, so she closed at $71. Right now she's trading out at $79. Let's see what they're saying here. The revenue... There she is. Okay, so net revenue is up 22%. Man, that's a big number. Okay, so she's up $9. Last high out here. We bring this back. Let's put this on a weekly. Oh, she's gonna be an ABC up. There's gonna be a trip watching this shake out, folks, because she's been consolidating, and she's gonna go after this high. And she's going after this high with some juice. It's a beautiful thing. And we talk about juice, folks. Let's go over to our man, Mr. Darrell Martin. Each and every trading day, 1 to 2 Eastern Standard Time. Our man Darrell has an outstanding show right here at TFNN. He specializes in the Nadex platform. It's an absolutely outstanding platform, folks. If you haven't used it yet, come over to our website at TFNN. You're going to see the banner right on the side. Hit the banner. You can bring up the platform, bring up the account. They'll put $25,000 of paper money into your account. You can listen to Darrell every day, learn how to trade this market. Listen to Darrell and I on Fridays, 10 to 11. We have an outstanding show walking through how you trade these contracts. Now, once you get the platform up, Darrell has an analyzer that you absolutely want to test drive to see if it's going to work for you. It's huge. It doesn't tell you, folks, you know, going long and going short. What it does do, though, is that it takes the contracts that are out there. You tell them what you want to look at. It brings them together so you can have something that's very efficient, number one. It is fast, but it's the fastest that is not that's going to do it. It's the efficiency inside the analyzer that basically will tell you what contract you should be trading. Darrell Martin, what's going on?
How's it going, man?
It's going great, man. Hey, let me ask you, I've been trading, and this is you know, what happens, folks, in Nadex is this. You have the indices, you have commodities, and you have currencies, okay? And I've traded all of them. But you know, folks, what happens is this, is that when you're on the right side of trades, you always think that, oh, hold it, this is just so easy, okay? When you're wrong side of trades, of course, you know, seriously, right? So
yeah, you're like, I'm a genius. I'm a trading god.
Totally, yeah. Man, totally. But this is my question, right? Now, this is getting, and this is what the question is. I've been trading. I loved, see, from last Thursday, how the dollar moved versus the euro, okay?
Right.
To me, that, you know, there was going to be another reversal. Okay, so I've been shorting the euro on Nadex, right?
Okay.
And what I've seen, and what happens, folks, is this, and now the bummer out of this, I guess, is that I'm going to start getting up at 3 o'clock in the morning and 4 o'clock in the morning to really get the juice out of it. Okay, but that's okay, just for.
That's FX for you, right?
That's FX, okay? But even I wasn't doing that. I was taking the contracts at 8 o'clock in the morning, okay?
Okay.
But what I realized, Darrell, right, is that I was getting contracts, right, and the spread was only 4 to 5 pips.
Oh, yeah, and sometimes it'll be 2 or 3.
That's amazing, man. That's like...
on an option, that's absolutely amazing.
Folks, this is, you got to look at this. And just, if you haven't done it, paper trade it, okay? Because I'm telling you, I'm saying to myself, this morning, this is what I had to do this morning. I had to actually... You know, I get the Bloomberg sheets. I had to bring it up 3 times to say, okay, am I really going to be able to get this price? Because, okay, here, I'm going to bring up the euro for you just for a second, just so you can see how many times it moves, folks, okay? When you're talking 2 or 3 pips, at 11:06 we moved from 135.34 up to 135.50. 57. Now, that doesn't sound like a lot of money. Folks, that's like a couple grand with a risk of, I think, I don't know, maybe $150.
Yeah.
You know, now, I didn't get that, okay, because I was on the other side of that, but I didn't lose money because this is the, you know, you hear the ad all the time, folks, okay, that you traders just stop. But what ended up happening, it ended up coming all the way back down again. So I made 3 or 4 ticks. Do you know what I mean? Not a big deal.
But, but you put 150 up, you made 150, whatever. Yeah, I mean, that's, nobody can complain about that.
Man.
Yeah.
It blows my mind that that's really good to know, man, because it seems that the indices, you have more spread than that. I know you have more than spread than that because I've been trading it. Do you know what I'm saying?
Yeah, well, that's why I marked the proximity on the scanner, because you know exactly what it is instantly. You also see your risk instantly.
Right.
So you can scroll down. You can look at 20 markets at once. You don't have to do 25 quicks.
Yes.
You know? You can see every expiration. I mean, if I want to see everything, I just click reset all filters. I click the category at the top of each, and I can see every market, every spread, every calculation on every instrument at one time.
I'm gonna get up in the morning because you know my understanding is now I haven't traded the yen yet, right? But the yen's going to have an announcement tonight, aren't they? Right?
Now your spreads on your FX. Now you got your master spread, but that's going to be obviously a little bigger risk. But because it's the really wide one, it's right in the middle.
Okay.
Now your spreads are going to trade from 6 to 11, from 11 to 7, and from 7 to 3.
Say that again. 6 to 11.
11 to 7.
That's a good one for me. 6 to 11's good. 11 to 7. That's before I go to bed. I can put it on and go to bed.
I do that a lot, actually.
Okay.
And then 7 to 3.
Okay.
So you can put it on before you go to bed, let it do its thing, say you take profit, whatever.
Right.
It's $150. You're going to make thousands if it works.
Folks, I'm telling you.
You don't got to win too many. I got a trade on right now.
No, I saw that, man.
And then I got an oil trade I want you to look at, because this is sort of using some of the stuff I've learned from you. I got an oil trade I'm looking at. And got basically a few, magnet levels here. Yeah,
let me get the contract. Okay, go ahead.
All right, we've been oscillating right around 104.20.
Yeah.
Okay, just keep coming back, hitting that point. 104.50, we had a magnet price that came basically all the way back from, let's see, what was that on? That was on the 9th. Okay.
Yeah.
And it was a resistance. It became a support. Now it's sort of just, it's pure magnet. It's just up and down all over it. It's it's a scalper's dream right there. Okay.
There it is. I got it. Yeah.
Okay. So now the next two places we got a bump up from 610 to go on up to basically 105.
Yep.
Okay.
105.06. I got that.
And then a target on the downside. Here's the money trade. Okay. Is going back from 6.6 going on down to about 102.70 or so.
Right. There it is right there. I got it. Okay.
And so that's the trade I'm looking at as possibly happening by the end of the week.
Yeah, it would be beautiful if we're on Friday morning, and
you're talking about a 5?
We'd love to see that thing spike to 105.06 Friday morning, man. See, what we're doing, folks, is this. And
it could go either way. So I got long and shorts on.
Yeah, it can go either way, right?
Yeah, but those are the two places I plan on it going.
Right.
And so if it flies down, now I'm going to clean up.
Right.
Okay. I'm going to make like 10 grand on the trade.
Okay.
Okay. If it goes up, I'm basically going to break even.
Okay.
So I'm sort of leaning towards the downside, but I'm hedging myself just in case I'm dead wrong.
Okay.
So if it's above 104.75, I'll break even on the trade. If it goes down to 102.60, 70 there, actually to 102.75, then I'll make about 10,000.
That's nice. Well,
and that's using the binaries. So I just put the thing on. I'm not watching the futures. I'm not No,
I'm with you.
I'm with you. Yeah, you could put that binary on for about $3, right? $5 right now.
That's crazy. Hey, you just stay here with us for a few seconds, okay?
All right.
Darryl Martin, Tom O'Brien, we appreciate you growling and prowling with us out here, folks. The Dow finished out at 102, NASDAQ out 6, S&P's up 6.5. You stay right there, folks. Darryl and I are coming right back. Inside the break, folks, you can just go to TFNN, go to the Nadex platform right there, hit it, bring the account up. They'll put $25,000 in funny money. Listen to Darryl tomorrow. Listen to us on Friday. We're going to be coming right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish down now 102, NASDAQ off 6, S&P's off 6.5. We're talking about our man, Mr. Daryl Martin. We are talking the Nadex platform and his specifically his analyzer. You know, so inside, so I guess if I'm doing the euro, 11 to 7 would work because most of that movement's at 4 o'clock in the morning. Oh, no, that's the yen, huh?
Yeah, well, the yen will move at night and in the morning. It's sort of the yen is a interesting little pair, but yeah, the euro you'd want 11 to. Well, you have 11 to 7, so you're going to get all that pound, all that euro movement. I mean, it's 3, 4, 5 a.m. is when all the movement happens.
No, it is exactly.
So that's when you expect that. So, but what do you think about the? Am I right on my magnet price on the oil analysis?
Yes. Yes.
On where it's going to go.
This is what is going on, though. Is that? Let me bring that. I had your chart. Right. Let me get that chart back up that you just had up here. 1 second. Here it is. Okay. So let me put this on CLN4. So what we did today. Let's see. We did 166,000 contracts. Yeah, see, this is nice what it did today for you. Okay, so you got to a price point of 104.81 today, which got you over the high of 2 days ago, which is 104.57. You had 166,000 contracts versus 247. So that's a failure on price and volume there, okay? So the daily's going with you, which is good. The intraday, which I worry a little bit about, is this. See the spike that hasn't got tested yet at that high? That's like, oh, is it going to basically get there first? You see what I'm saying?
You're talking about the 105?
Yeah, the 105.06.
Yeah, that's well, see, that's not totally bad because I guess I have a hedge on.
Right, no, and it'd be good. Listen, it's Wednesday, right? Hey, it can spike up there tomorrow, and you had it's more important of the daily, okay? What you would have loved here is if the intraday and the daily was lined up the same. Do you know what I'm saying?
Right, so the daily's like looking at going down. The daily needs to almost go back up there and fill that high to really give us that strong short down is what you're saying.
Yes, okay, except that I just found this too. This gets interesting. No, no, see, you watch. Because at 10:30 today, that spike down, you're gonna get this, man. That spike down is just negated that one up, and this is why. So watch this, folks. At 10:30 today, we got to 104.49, and we did, see that 12,000 contracts? So watch what happens. We got into a low, this is intraday. We got into the low, hit that intraday. Then what we did, and this is where both sides have to work out. Then you got into a high at 11 o'clock with 5,300 contracts. Now see that high got to 104.81?
Right.
Well, guess what? It got to the bottom of that bar, that the bar we're looking at, because the bottom of that bar is 104.77. So that was the test.
Because when it opened up, it basically tested on where the high of that bar was, which was 104.71. So
that's right.
It already fell to high, and then it came back down.
It came back down, and then when it came back up, that first high I was looking at from June 10th, at 11 o'clock, it had 5,300 contracts, so it was going into the spike of yesterday with 5,300 contracts and rejected it versus that 9,000 contracts. So that's the test. And so your next level should be down at this 104.27. If you get juice on it, you're going to have action, man.
Right, so if it breaks, because that's what I'm looking for. If it breaks down here at this 104.27, if we can get some volume breaking through it,
you'll get action, man, quick.
And that's when we get to go down to that 102 level.
That's right. Because if you're watching Tiger TV, folks, there's nothing in between that, right?
Yeah, exactly. So that's why I saw. I was like, it's just an empty wasteland. There's nothing to slow it down.
It is, and the daily you have it going. And what you also have, on a fundamental basis out here is that, I mean, there were a million oil stories out here today, folks, okay, that, oil's going to stay high, the Saudis are doing this and that. I mean, they were just all over the place. When I was reading, I said, this is really interesting, man.
I love that, because that just means it's going down.
Exactly. It's like, okay, hold it.
Keep pumping out that positive news.
They shouldn't have to pump it up. Do you know what I'm saying?
Mm-hmm.
So... Okay, brother. Well, listen, man. We really appreciate it. I think I'm going to be on those currencies, man, for a while. We'll find out, but.
You'll love them because I mean the margin is nothing, the risk is nothing. I mean listen, it's just stupid right now.
It is stupid. You put
$100 to control 100,000 units of currency, really?
Yesterday on the move down, right? I think I'm not kidding. I think I only put up $80. Yeah. I mean, I had to look at it twice, man, saying, okay, hold it, and that was 10 contracts. But what happened? Just so you understand, folks, the trade wasn't going all day. This was a 2-hour trade. But yesterday I had both of them, a 2-hour trade, and what? The other one goes to 2 or 3 in the afternoon. 3 in the afternoon.
Yeah, it's like getting Friday expirations options 3 times a day, every single day. That's what it's like.
I like bond for those, man.
Oh, I know.
Okay, man. Have a great one. Have a safe one.
Hey, you bet, man.
Let's go to Mike in North Carolina. Hey, Mike, what's happening, man?
Hey, Tom, how are you?
I'm doing great. How you been?
Oh, I've been fantastic. I'm going through just a wicked thunderstorm right now, though. It's like amazing out here. It was like a waterfall out of the sky. But
anyway,
yeah, it's crazy. But yeah, we need the rain. So.
Yeah, we got to keep you safe. That's good. Okay.
Yeah. So I want to take a look at Kinder Morgan.
Kinder Morgan. Let's take a look. This is a pipeline transportation energy company. They transport natural gas, gasoline, crude. The low is $30. The high is $40. It pays a 4.8% dividend. Okay, so
I want to get long. I was thinking it might come down to 34.
Yeah, let's take a look. Okay, so I'm going to put this on a monthly. Okay, so on a monthly, let's see what we did. Oh, this is interesting. Okay, so when we bring this back to 2012, you had a swing low of $30.51. That was generated June of 2 years ago. June, 207 million shares. We committed to that with 139, rejected it. Okay, so what you have here, folks, you had the test at the bottom. We had gone, okay, so first off, you had a swing low, $30.51 2 years ago. You went from that swing low of 30.51 up to 41, huge expansion. Guess what? You went all the way back down to 30.81, tested it. Now, after the test, what he's looking for is that, okay, now yeah, you're at 34.90, and I'd let it come back into this 33.83 area. And where I'm going with it, Mike, is this. The way we're coming into the downdraft from the gap, it just doesn't have enough volume. I mean, 13 million when it gapped lower. Mm-hmm. But what you do have is that as you went up to $33.95 the first time on April 17th, the second time on May 15th, you had power there. So that's a nice place to lay that trade out. It'll take probably 3 times to get through that downdraft from January. What I've found is this, is that when you're going into downdrafts, folks, if it's going to make it through the downdraft, most of the time it takes like three to 4 times. And what you're looking for every time, though, is like when I just brought up those 2 dates, you're looking for an expansion of volume as you go into them. That takes off some of the supply line. It backs off again. You go back up again, get an expansion of volume that takes off some more of the supply line. So you're just wearing the supply line down. That's what you're doing, basically.
Cool. Yeah, sounds good. So what do you think of it fundamentally?
It's a good business, man. And, 4.8% dividend. Let me just see what they're pulling in. I mean, oil's not going away. $4 billion a quarter,
Yeah.
That's a lot of money, man.
Yeah.
And the gross yield, folks, is not that outrageous. When I pull some of these pipelines up, and if you're pulling up, 10, 12, 13%, you're always worried that, and guess what? That dividend's going to go away. 4.8 for a pipeline is something that is feasible on a continual basis.
Sure.
Hey, how's the coffee business?
It's good. You look at, I don't know what you think of Starbucks stock, but they, the stock, they came off its lows, and it's looking okay to me right now. I guess to add on to that.
This stock had the biggest run. Forget it, man. Right? That run was extraordinary.
It's amazing. I don't know.
Folks, just so you understand, Starbucks had a tenfold run like a gold company. People die for 10 baggers. That's what it did. $7 to $75, well, $7 to $80, right?
Yeah. It was amazing.
Hey, you guys are going to get in the wine business, right?
Well, they've already done it in some stores out primarily on the West Coast, and like some, cheese and meat plates and things like that. And
yeah.
Craft beers. But the big thing coming up here in the near future is like custom sodas.
Is it?
Yeah. So those are coming around the corner.
Yeah, that makes sense, right?
Yeah, no doubt. So.
Hey, can you stay with us for a second?
I sure will. Yeah.
Awesome, man. You stay right there. This is gonna be like the soda fountains of old, man. They can make some money. Stay right there. Mike's coming right back with us.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. So, talking with Mike from Raleigh, we're talking about Starbucks and where they're going with their business model. So, you know what just dawned on me? You know, I heard that, you know, they're basically getting into like the craft sodas, but then I realized that, oh my God, I mean, I realistically could see people paying $3, $4, $5 for a craft soda, which, I mean, I know I love the coffee. I pay $5 every day. I mean, I use the, you know, I do the Clovers, Mike. Okay, they all don't have them yet. But if you haven't tried a Clover machine yet, folks, and you're in a Starbucks that has one, do it. Okay,
it's the best cup of coffee in the world. Yeah.
It is, man. It's amazing. So, yeah, I can see how that business is going to be huge. So,
well, it is because if you take a soda like San Pellegrino, that Italian soda, it has real fruit juice in it. And
yes,
that's kind of the idea. So they're going to make, real. It's not going to be, like a Coke or Pepsi type product with the syrup and all that.
Right.
It's going to be more of a, fruit juice based thing.
No,
so
I can see it. I can see it with the different taste. There's no doubt about it. And that would be. And then we're going to be going in. It's pretty wild. I have no clue how they can remember all the different drinks, and they're really good at it. No, I know. They know. I mean, seriously, right?
Yeah. Well, it's a system. You memorize certain ratios and
right,
and the basic build method. And you got it. It's not as complex as it seems. But yeah, to do it as fast as some of them do it is amazing. You're right.
Yeah, it is unreal. Well, listen, man, thanks for the update. Keep us updated, man, because now, when I saw that come across, I was really kind of looking at it like, the soda machines. I says, that's not a big deal. But then I realized when we used to have soda, like fountains in drugstores all over the place, it'd always be mobbed with different drinks. And that's not a competition. That's not out there anymore.
Yeah, that's right. Yeah, and the combination of beverages that you get everywhere else is all, high fructose corn syrup and coloring,
Absolutely, man. And it's not fresh. No, I used to get whether it's a grasshopper or every single night. I'd finish whatever I was doing when I was a kid, man, and that was the first place I'd go, man. Amazing.
Yeah.
Cooking, brother.
All right. Have a great one.
Have a great one, man. Let's get to Rob in L.A. Hey, Rob, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. You having a good day?
Yeah, excellent. Thanks.
Cool, man. Okay, so Mankind Corporation, right?
Yeah, I have a position around 9. I was just wondering what the target is. And
let's take a look. You get a biopharma company. The low is $3.80. The high is $11.11. It looks to me, now this just finished an ABC structure on the way up.
Okay.
Yeah, this is a long-term ABC structure on the way up. Your A point on this is going back to November of 2012, let's say $1.80, right? Your B is the high of $8.70, which was established in August of 2013. So you got, what, $6?
Mm-hmm.
And what you can do there, your C is either the low of the 4th, or even if I take the C at 420, you got, $10.80, and it hit $11.11. So the real key is that is it going to, let me see how you can be insulated. The thing is kind of neat on this, just so you understand, is that this shouldn't, 870 to 808, it's going to be hard to break that down. But we know how these biotechs go. So when are they going to be coming out? Or you never know when the next announcement is, but are they going up for any FDA approval soon?
Yes, actually, July 15th is the FDA approval.
Ooh. Okay. So what you want to do, you want to really keep a close eye on how this is trading, the couple weeks before that. And it's not, folks, most times you're not going to really get a clue on a biotech. Sometimes you do, though. I mean, if this thing starts pushing highs with volume, it's like, okay, does someone know something coming into it? Do you know what I'm saying?
Yeah.
Let me pull this back 15 years for a second. Oh, I see what you're looking at. Interesting. Yeah, you know what? I would... I'd stay right there, man. I like what this looks like. So all the volume... So what does this have? Because all the volume has been coming in into this year, man. This thing looks like it's going to try to at least bust into $12.30. And if it busts it, you get some action, man.
Yeah. Yeah, that 1240 high from like 09, right?
Yes, exactly. So watch, the 1240 high from 09, folks, had 30 million shares. Well, guess what? This is pushing higher with 294 million and 263 million. That's how you want to see it. I'd stay right there, man. This is definitely pushing into a swing point with volume. When you push into a swing point with volume, you like to bust that swing point. So this is what you want now, Rob, okay? So watch this, folks. You don't want it to break 1250 or even test it before the announcement. Because if the volume stays like it is right now, right, and you're below that swing point, it's going to go after that swing point. That's how that's set up. It doesn't mean it will hold it, but it will go after it, meaning that it will bust it, and then we'll see where they get the volume there. But the way this is set up right now, it looks to me like it wants to basically at least go into it.
Oh, okay.
Cooking, brother.
All right. Thanks, Tom.
Have a great one, man. Have a safe one. Let's go over to Big Blue. Big Blue, folks, is going south again. There's a seller in Big Blue, and there has been for a long time. Because picture this for a second. IBM is buying millions and millions and millions of dollars of their stock back, and they can't hold it up. What we did out here today, we broke a B point of an ABC structure on the way down. It's a 10-point ABC structure on the way down, too, folks. You broke the 182.23. You're at 182.25. You hit 182.01. You broke it with 4 million shares versus 2.7. That sets up, guess what? Last swing point, lowest swing point out there, 173. That's on the daily that's on a daily basis. On a longer-term basis, it looks to me like you have a very large ABC down. I mean, and it's a monster, too. And this has been building cause for quite a while. And if you want to see how you can build cause on a much longer-term basis, if you're watching Target TV right now, you'll see what I'm doing. I'm just setting up the whole structure, ABC structure on the way down. But what you'll have is that you'll see, going back to October of 2013, what you did is that you hit a low of 173. You did it with 45 million shares. Then you go up with 22 million. You come back down with 32 million. You go up with 30 million. These are weeklies, and it's going back down to test that area. That ABC structure down, though, is 215 to 172. That's $40. That gets you a 150 IBM. You stay right there, folks. We'll come right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day after the market close. Tom takes your phone calls from 4 to 6 p.m. Eastern Standard Time using the data available at that time.
Let's go to Jay in Boston. Hey, Jay, what's going on?
Hey, Tom. You really assembled a stable of amazing people. I mean, they all have different strengths, different areas. And,
yeah.
Man, each one is a superstar in their own way. I've seen it over the years.
Well, listen, man, we appreciate you being out there growling and prowling with us. If you guys and ladies and tigers and tigresses weren't out there, folks, we would have zero.
Yeah, it's unique, and it's and it goes back to your basic belief of an open platform, which I've heard you say that years ago.
Right.
And it's really bearing fruit now.
Yeah, I agree. It is.
Yeah.
Cooking, brother.
Thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone had a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our Believe cards. Now, this is an unknown author. The start to a better life or a better world or a better future is simply to believe that it is possible. No doubt. Visualize it. Step into it. Take ownership of it and fly with it, baby. Market-wise, let's take a look at it out here. We had the Dow Industrials up 102. NASDAQ up 6. S&P's up 6.5. Gold contract up $1. Trading at $1,261 an ounce. Silver up a couple pennies at $19.18 a barrel an ounce. Platinum $1,483 an ounce. Light sweet crude up 13 cents, trading out at 104.48. Bond market, we had the 10-year up 3 ticks at 124.01. What the 10-year did, folks, is this: rejected lower price today, did it on lighter volume. It's going to start making a heading for its last highs out here. It very possibly could be another ABC structure on the way up. If that's what you get, it's going to be a 127 to 128 10-year. The yield on the 10-year right now is trading out at 2.63. 30-year. 30 years at 124.01. Also rejected lower price on lighter volume. 30-year right now heading is at 134. Heading up to its last high. If this is an ABC structure on the way up, wants to go to 142. Now, what's going to be intriguing is that ICE, from the highs of 2.5 years ago in the bond market, is the 142 area. So that's where bonds make it or break it, because a normal retracement likes to go to ICE. And that's down or up. In this case, we're talking about bonds. They went all the way up, pull back down, going back to test ICE. Now, the test thus far has still volume on the way up, and it very well could be an ABC structure on the way up. Longer term, but that's how it's set up right now. Longer term, of course, if we take a look at this chart for a second, what you're going to see is this. There may be larger bull markets out here. I haven't found one. If someone else can find one, please tell me. I'm bringing this back 40 years. And the bond market, folks, is the longest bull market that I basically have seen. That bond market started in 1981. Low was established in September of 81. It hasn't stopped since then. Had a vicious retracement in 98. We bought the 30-year, went from 135 to 89. The thing that's amazing is that even think it was at 89 in 2000, and then just all the way back up to 153. So even at 89, you're getting paid big money. Bottom line, we'll see where it shakes out. King Dollar. What is King Dollar doing? King Dollar, folks, who wants higher price. King Dollar right now, she's out at 80.80. On King Dollar, she's building cars. She has the juice behind it. She wants to run up to this 81.65 area. Now, if we take a look at King Dollar and put this on a longer-term basis, I'm going to, just like I did the bond, let's pull this up, and I'll put this on a 15-year monthly. What you're going to see is this. King Dollar, and I remember this so well because it was right when I started the Gold Report in 2002. King Dollar was trading out of 120. Well, the correlation then was like, okay, King Dollar wants to get cracked. Well, guess what? It did. King Dollar went from 120 all the way down to 70. We're at 80 right now. Now, we hit the lows in March of 2008. We're in 2014. The amazing thing to me many times is that when you hear folks saying, well, the dollar's trash, the dollar's going to go down. The dollar has been going up since then, number one. More importantly, the dollar has volume at these highs. It's been building cause. And when you start building cause, when we're talking for 6 years, each and every time that you start approaching these highs, it's important to keep your eye on them. The first high that I suspect we're going to, get up to is going to be this, 8150 area. We'll see how it handles the 8150. If it handles the 8150, then you'll see that it'll run up to the 88. I don't expect that you'd go through the 8150 and the 88 simultaneously. It'd take way too much energy. We've been laying under this 8150 area now. It's 83. We've been laying under that for just about a year. It's going to make another run. We'll see whether it can do anything. Last time that stayed up here for quite a while. It stayed up there for 4 months, going from June all the way over till August of 2012, and it stayed over there from March until August of 2013. It's going to be kind of interesting, because you can see that was the same time frames that it stayed up there. We'll see what kind of juice it has in there, but it's certainly both times you'd only back down to the 78 area when our lows out there was 70. So bottom line, King Dollar wants to go higher. And something to always remember is that what is the competitive atmosphere? That's what you want to come down to. So when we talk competitive atmosphere, we're going to go right back to the bond market. Well, guess what? This is what the competitive atmosphere is. When you buy debt, you have to buy debt in the currency that you're buying it in. Well, our 10-year is still yielding 2.6. You want to go to Brazil where they're having a mess, they're having a World Cup that they don't have the structures in place? Well, they'll pay at 4.2, but guess what? Their peso is done. You want to go to France? Guess what? They'll pay you 1.7, and you're in the euro. The euro is going down. You're only getting 1.7 for 10 years. Better yet, go to Germany. They'll give you 1.3. Euro's going down. You can see competitively what's going on. As folks come into our treasury market, and there's not enough treasuries right now for the demand, they have to come in and they have to buy with U.S. dollars. Because something that you want to wrap your head around, it's not you and I that are just buying treasuries, folks, okay? It's the world. Currencies go across borders. One little hit of the computer, there's the currency across the border. When they're buying treasuries, whether it's sovereign countries buying treasuries, whether it's large foundations buying treasuries, they have to buy them in U.S. dollars. And then what ends up happening, that's the sovereign market and the corporate bond market, what you have and have had this past year, not 2014, 2013, the most amount of bonds, dollar bonds, were issued by corporations outside of the United States than ever had been issued. So specifically what that is this. Let's say that we have Siemens. I'm not sure whether Siemens did one, but I'm going to give you an idea of how this would work. Siemens in Germany. They want to borrow money. What has happened is that you can borrow money and get it much quicker if you are borrowing in U.S. currency. Why? Because the demand is there. So what large corporations have been doing, they've been floating dollar bonds and U.S. currency, paying an interest. When that happens, when foreign corporations do that, they have to do what? They have to buy U.S. dollars to issue the bonds, and then they gotta, then they gotta pay the interest in U.S. dollars. That is a fundamental driving force inside that bond market. Never mind that competitively, and how large funds look at rates absolutely have to do with the percentage that you're getting paid over what you would get for a U.S. Treasury. For you and I think, when I look at it, I say, okay, you get a Treasury at 2.6. If you get, I don't know, $5,000, $10,000, $20,000 and you're putting something away, it's like, is there a big difference between 1.7 and 2.6? Yeah, there is, okay, but it's not the end of the world. You start talking, though, 50, 60, 100 grand at a time, or a million, that difference, percentage-wise, is dramatic, huge, and competitively, that is what you have happening, and that's what's absolutely driving rates low, and I suspect it is going to drive rates even lower. 877-927-6648. We ended out, finished down 102. NASDAQ off 6. S&P's off 6. You stay right there, folks. We're coming right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in y'all world. In the world of TFNN, folks, as we do each and every Wednesday at 20 past the second hour, we get our man, Mr. John Logan. And, folks, each and every trading day, by 8 a.m. Eastern Standard Time, John does a huge amount of work for us at TFNN, for many thousands of traders across the world, actually. But bottom line, he puts an outstanding video on our site. It's a free video. You can take a look at it. Today he was doing the S&Ps. Now, as you're over there, you can also test drive the Taz signal box. So the video is on your right-hand side. You'll see free video. As you're looking at the website, you'll see the Taz signal box on the left-hand side. Hit that. Bring it up. You're going to see what an outstanding program this is and how it can help you not only in the commodity market, the futures market, the currency market, but he also has the S&P 100 on there trading equities. John Logan, what's going on?
Hey, Tom, good to be back with you.
You too, man. How you doing?
Doing all right. Looking at these S&Ps as everybody else is.
I'm telling you, man. I got it up on Tiger TV right now, and, you know, I get your video up on the left-hand side, and I got the Bloomberg up on the right-hand side.
Yeah, as you see, we've got a new profile that's appeared all of a sudden on our daily there.
Right. So
yeah.
let's talk about how that works with a new profile.
Well, you know, we kind of have been waiting patiently for some new information to appear, specifically speaking about the S&Ps now.
Yes.
And this run-up has just, it's been hard for shorts. I mean, I don't have to tell you that. It's just, yeah, it's crazy. But
I don't even know if I got any. I don't have claws anymore. I don't even have fingers anymore.
I got tire tracks on my back right now. But we've got, you know, we've opted out on some longs lately, and we have not talked about shorting this market since around the 1898 area. We did catch some shorts around there. We actually caught a decent move down. It was 30 or 40 point move down. But when we got back above that area, these profiles did not allow us with sanity to try to get in there and try to, you know, pick a top or whatever.
Right.
So we've been waiting patiently because, you know, to buy something up here is just, it just goes against every moral fiber in my being, actually. But now we've got new profiles that are appearing. I'm looking at your screen right now, actually, and on eSignal, I'm looking at the same situation. We will see those boxes appear tomorrow, and that will give us new inflection points that we can kind of lean against from the long side and the short side. So if we get some pullbacks, obviously there's going to be some support areas based on these profiles, and you know, if we get some rallies, we'll have some things to lean on the short side. And the good news is, as we always talk about, you know where you're wrong, and you know where you can put your stops in, because if you don't do that, they can take you out in a body bag, as you know.
Totally. Now let me ask you, folks, if you're driving in your car, remember the program's archived. Well, actually, driving in your car, all you have to do is go to TFNN when you get home and go look at John's video today, because that's what we're talking about, okay? So when I'm looking at this, right, now the magenta bar showed up today, too, right? So does that mean it's overbought at the high?
Well, that's really kind of cool, because at the same time that we've got so-called new supply that's appearing above in the marketplace, we've also got a magenta bar that's, for all your listeners out there, on our navigator, which is down below if they watch your archives.
Yes.
That is an indication that we may be a little overextended.
Okay.
So, you know, again, you know, we're talking about trying to, you know, trade the market instead of being a long-term investor here.
Yes.
And if you are a long-term investor, you know, it may be time to take a look at that from an intermediate standpoint and say, you know what, if I'm going to continue to try to be in the market, maybe this is the time I need to look at scaling out of some things, or waiting to buy more a little lower instead of right here.
Right.
So you know, I'm also looking at the 10-year. You talked about the bonds earlier. I listened to you.
Yes.
And, you know, it's a very interesting topic that you covered. But on the 10-year, you know, we've talked about that 125 breakout area on the 10-year, and we're talking not about rates, about the actual bond price right now.
Right.
Which is completely inversely related to rates. So as the bond market, or as the note market comes in, right, rates inversely will go up. So as this market has come in, we have actually come back to that 125 area, which was the breakout on the weekly and somewhat the daily before on the way up. And we kind of come back, and now we're back right there. So this will be the breaking point for interest rates and the underlying value of the notes and bonds right now. We have to kind of, I'm a fan of, at this stage, you can't argue with the Fed, and you can't stand in the way of a Mack truck. So there is a bid in the marketplace, always, by what's been going on with this government lately.
Sure.
And the stock market, by way of what we just talked about, may have a little bit of a resting period here at the very least. And then what do notes do when that happens? They usually, the good news is if you're trading notes or bonds, you always kind of have to look at it biased towards the long side. And I kind of gave up on trying to make sense of fundamental things going on in the bond or note market. I just traded on technicals, and technicals say that we have come back and we're sitting at support on the notes. At the same time, the market's actually possibly overextended. So, we may get a bounce here in notes, which means rates may temporarily kind of slide back again a little bit.
Yeah.
But these are all, just technical indicators that we're looking at. And I try to ignore a lot of the, fundamental Fed speak out there and just look at what's ahead of us. On the signal box, interestingly enough, I haven't really been using our own product other than for the usual suspects of the commodities and futures world. But we've added the S&P 100, and one of the things that is really neat that I know you've done in the past, and you probably still look at it this way. If you're trading stocks, you got to look at how's your stocks doing versus the sector. How's it doing versus the general market? It's a relative strength trade.
It is.
And that has always been something to keep in mind while you're using technicals. And as the market goes up, and it's possibly at an inflection point here, and it may kind of either gather itself to move higher, slow down, or it may just pull back in general, you've got to look at weak stocks relative to this big rally up.
Right.
And say, okay, well, as the market has rallied, why haven't these stocks rallied? And if the market does turn south in general, theoretically, these stocks that are weak should fall faster than the market on a relative strength basis. And I've started using our signal box, and I'm looking at, what stocks are below profiles right now and what stocks are showing weakness.
Nice.
And I just quickly looked across the board, and the main candidate, the main one I saw was IBM. And we're below profiles on every single time frame that I'm looking at right now.
Yeah, IBM's in big trouble, man. See, that's so cool, man, because I've always felt you get more information, not just the marketplace, on defensible positions like you're talking about, than you do with things that are going the right way. Do you know what I mean?
Yeah.
Yes. Yeah.
It kind of puts another piece into the puzzle to solve it.
Yes.
For me.
Yes.
And if you're trading stocks, you can't. I mean, hope is a terrible thing. I remember that when Morgan Freeman said it in Shawshank Redemption. He said, "Hope is a terrible thing," and hoping really that stocks will go up and the market's going up and your stocks are not going up. I mean, you really just have to take a hard look at that. And when I look at our signal box, I just looked at it and said, well, the market's been going up and probably will have a pullback. IBM was just the number one candidate for it to go down. So
No doubt. Hey, can you stay with us?
Sure.
Awesome, man. You stay right there, folks. This is John Logan, Tom O'Brien. We appreciate you growling and prowling with us. During the break, folks, you can come right over. Check out that video right now. You can test drive the Taz signal box. John and I are going to be coming right back, folks. Dow finished down 102. NASDAQ got 6. S&P's up 6.5.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're talking about our man, Mr. John Logan. We're talking about the TAS market profiles. We're talking about the signal box. You can check out the videos he does on our website every day, folks. Every trading day, 8 o'clock in the morning. It's a free video. Check it out. It's on the right-hand side. As you're over there, you can check out the TAS signal box, and that's an outstanding program. John, I want to talk about gold a little, because we know since the highs of 2012, the profiles basically are saying, hey, listen, man, there's nothing here, which has been the case, no doubt. So when we look at, walk me through what we're looking at. I saw new boxes that showed up in gold, but what specifically does that mean? On the daily.
All right. Okay, yeah. We're going to talk about gold. That's interesting. We never talk about gold. Okay, we're looking at gold. I'm looking at our charts right now on my screen. You know, obviously, somebody can go back and look at the latest archive videos of gold and kind of see the mantra we've taken on gold. But, you know, as we look back in history, we have talked about gold really as the breakdown happened around 1800, that neighborhood. We've actually either stayed within or below profiles, have never, ever on a weekly close been above profiles. And when I say profiles, yeah, your people will see that.
Okay.
You're showing a little bit different information on Bloomberg, but I'm just going to kind of run with it because it's basically the same situation that I'm looking at.
Well, I'm going to be up on the E signal in 2 more days, so you'll see that the next time you're on. All right.
God bless you.
That's a beautiful thing. That's right.
So as we look at gold in those weekly closes and the way this product has really just slumped into no man's land. You know, we haven't really had a lot of reasons on a long-term basis to really try to catch a bid on this, except when we had some divergences happening with some other information that we've been looking at and kind of crossing above inflection points. Now, there have been some great trading opportunities. I mean, I'm talking about $100 an ounce trading opportunities on the long side that we've talked about at times. But I'm looking at your screen a little bit at the same time here. As we have crossed below on a daily, confirming those weekly long-term move downs in gold that haven't broken any rules. Remember, we always talk about, is it okay to be long and not okay to be short, or okay to be short and not okay to be long? It's just a real easy way to eliminate one side of the marketplace. I mean, I fell in love with this, and I have never looked back. I mean, it makes trading a lot more simpler to diagnose, analyze, however you want to call it. And also just, you know, you've got 3 different ways we talk about always that you can go at the market. You can buy, sell, or you can sit still.
Sure.
This at least eliminates one of those choices.
And folks, if you happen to be watching Tiger TV right now and you get my screen, I'm going to go from a daily to a weekly so you can see what John's talking about. Because the whole time that when gold was going sideways, when we're going back from April of 2014 to the May of 2014, you know, John was saying, hey, listen, man, it's not closing above it. And I'll show you this because it's pretty intense, man, how this picked it up. And it's like amazing. It's like...
Yeah, you're going to the weekly right now.
I just went to the weekly so they can see the correlation that it could not basically get above that profile, man. Right.
Right.
And then, of course, it got smoked from 1293 to 1242, you know, next leg.
It was just the proper action, if you will, that shortists would love to see. It's a classical, not only are we not breaking any rules as far as our profiles go that we just spoke about, we're also looking at some classical technical analysis like, you know, these are kind of move downs, gather itself, move down again, gather itself, move. These are not bounce type scenarios, if you know what I mean.
Right.
So we've tried to stay away from any pick and bottoms on this lately. And right now, from what I see, we have kind of stuck our head up a little bit here, and you know, we're at the 1260, 1265 general area, whatever that happened today.
Yes.
But again, you know, I mean, I think, you know, because of the long-term situation, we're really right now looking for confirmations on our intermediate to really get back in the short market. And right now we're not quite there yet. We don't have anything to lean against up top. I mean, we're kind of in a little bit of a hole right now. But if we can get back down below the 1256s of the world and start, you know, kind of showing some, and like on the signal box, start showing some momentum on our shorter-term time frames, then we can use that 1256, 1257 area as a fence, if you will, a Maginot line that where we can, okay, it's okay to be short again,
right?
And we can put the stops oriented directly above that price
on the other
area.
side, yeah.
And that's what makes it so cool. I mean, really.
Yeah, no doubt. And you know what's going to be intriguing here? I mean, you know, it's not going to stay here forever. Nothing's go down forever, up forever. So it's going to be intriguing because we've been below those profiles for so long. The first time that we actually get above the profile, it's going to be like, okay, now, well, let's see what it can do. Because, you know, at some point, well, I suspect, folks, at some point it's going to, okay?
Yeah, I mean, it's a foregone conclusion that this is a volatile product and anything can happen.
Yeah.
But the good news is that you at least have a roadmap, you know, of sanity to try to trade this. And, you know, I mean, I've got some long-term hunches and things like that, but, I mean, these are battle points that you can kind of get in there and utilize.
Sure.
And and as we were talking about a while ago with the signal box and relative strength, just a couple more picks on that level. I mean, we talked about IBM. It's just kind of got his head in the sand, and if the market does turn down, and we've looked at those profiles on our S&Ps and why that's happening. eBay. We looked at a couple other things here. AT&T is showing really profile weakness right now.
Okay.
And that's something, that's a bellwether. I mean, it's no mystery eBay's been in a little slump here, but as the market has rallied, I mean, we've had a relative strength trade going on, and AT&T is another one along with IBM that is that's a Dow stock.
Oh, it's huge.
Yeah, I mean, it's.
Oh, you know what's going to get interesting? So this is what I just did, John. I just pulled up Boeing. The reason I pulled up Boeing now, right? You can walk us through this. I pulled up Boeing, folks, because what Boeing has done is this. It had a gap down the 28th of January. It was at 138. It gaps down with 16 million shares. It goes back up with 2.5 million, okay? Now, would this be a break in the profile? I'm looking at the box, and we're under the box now, and we had an expansion of volume. Well, you know my deal is volume, too. So.
Right. Yeah, no, you're preaching the right language here. I mean, that is a clear violation of an uptrend as far as profiles go, and you've got a possible. This is again we gotta gingerly talk about the market coming down, or we'll jinx the heck out of it.
I agree. Let's talk about it going up. Let's get our bull hats on. I agree.
Yeah.
Believe me, I want to go long just so I know that the market will go down.
Yeah, I had a friend. He used to kill me. He goes, "Let me get in there and buy it. It'll go down then." I mean, he used to goes,
"It's a fact." Always, I don't know how it works, but it's a fact.
Yeah, but yeah. I mean, it's interesting that we can do a relativity trade, and the signal box and those indicators, if you will, in the signal box really just predicate what are the right opportunities if the market does turn south, the ones that should fall faster, farther, harder, whatever. So I mean, it's really easy. I sorted it a while ago, and I was like, well, let me just find the weekly dogs of the marketplace of the S&P 100, and it just picks it out for you based on profiles. Now, some of these picks may be, if you take a look at this and get a trial, some of these picks are just, they can come off their highs very well. We've got some double inflection points, i.e., I was looking at Hewlett-Packard a while ago.
Yes.
Hewlett HPQ, that was one that we were looking at that's showing some top-ish action.
Oh, yeah, okay. Let's talk about that because it's the first. So a double profile.
Yeah, we got
a double inflection point. So let's talk about what that means.
Got a little bit of a weekly and daily kind of commingling happening here.
Oh, cool. Okay.
That means, if we can, get a little help from the market coming in a little bit here, we can, these things may break completely. So, and then, these are, obviously heavily tech related stocks here. But that's something, in the weekly and the daily, we're looking at kind of imaginary lines that line up that we can, again, know where we're wrong relatively quick above those areas,
right?
To put stops in and see if we can, kind of take a ride down. And again, that's dependent, that type of scenario, by the market showing these overextended bars on Navigator and our profiles, which are going to appear without question by tomorrow morning at the latest on some of the platforms that people are using.
Right.
Which will provide new leverage points, by the way.
Nice. You have to love it. Listen, folks, come over to our website at TFNN. You're going to see the free video every morning by 8 o'clock in the morning. John's either going to have a indice up there, currency, commodity, equity, all of the above. You can check that out. If you want to test drive the Taz Signal Box, it's a great piece of software. Has the S&P 100 in it, folks, which is, you got 100 high liquidity stocks. John Logan, you have a great night, safe night. Of course, look forward to speaking to you.
Awesome, Tom.
Thanks, man. Appreciate it. You stay right there, folks. We'll come right back. And don't forget, folks, tonight we do 10 hours on Wednesday. Allie and I are going to be back from 6 to 7 tonight and keeping you healthy, wealthy, and wise. We're going to be right back.
And Andy Heck's powerful weekly newsletter, the Technamental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technamental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technamental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. Don't forget, folks, at TFNN, we do 9 hours of programming every trading day. Today, Wednesday, we do 10. Allie and I have a show called Mindful Living, 6 to 7, keeping you healthy. Tonight, all that programming, you can get right on your cell phone. You put TFNN.mobi, TFNN.mobi. It streams live content 24 hours a day. Each and every, well, we stream 24 hours a day. Live content 9 hours a day, every trading day. If you want to get Tiger TV, the way you get Tiger TV, just go to TFNN.com in your browser. On the right-hand side, you're going to see a little box with devices. Hit the box. Our servers know exactly what you're on, and you'll get Tiger TV, which, of course, include all the charts. Let's go overseas. We'll take a look at the UK first. We had the FTSE out here. She was down 34 bucks. She is, you know, these tops in all these markets are pretty intense. The FTSE, the top we're dealing with is 68.67. Right now it's 68.38. It's poked its head up there It's poked its head up there 5 times since last January. It failed again. You know, I won't get the volume till tomorrow morning. We'll see what the volume is as this baby pulled back down. You know, and see. I like it. We're late enough. I got the volume. So it's 670 million, and that's going to need more volume. We had made a high. We made a high with no volume. So check this out. The FTSE on Monday made a high with 390 million, and today we come down with 670. So that aspect is really cool. Why? Because the test on Monday had 390 million going against its last high with 900. Check that out. So that's 60% lighter volume. What does that mean? That means that you have distribution at highs. That's telling me FTSE, guess what? Now that's going to run down to 67.82. We break that with volume, which looks like it could be done real easy. Then you're going to can't bust them up. You're going to go to bust them down. Busting them down in this particular case is almost, well, it is the exact same correlation date-wise as to where we were on February 5th. So watch how this shakes out. Your first high in the FTSE out here in January, right? January, we're at 68.67. By February 5th, we're at 64.16. The DAX in Germany. We go to Germany. We take a look at Germany. You know what's amazing? It blows my mind how fast time goes. We're in June, and you know February 5th low. I remember that so well. The DAX. What do we do with the DAX? Okay, the DAX down 78 bucks. Now the DAX is out of its range, meaning its higher range. But this is cool. I got to remember this if I bring this up this late at night. These volumes must come up at 5:30 Eastern time for me, because I got the volume here too. This is definitely an expansion of volume. So check out the DAX in Germany. DAX in Germany had made a high with 64 million. We come off that high with 96 million. We're at 99.49. Now the DAX would have to come down another couple hundred points to get inside the lower range, because the DAX broke out, and when it broke out on the 26th of May, it didn't have volume, but it had the price. It broke out on 53 million. Took the swing point out of 133. Let's talk about a false break. What is a false break? Specifically, my definition of a false break is that when you go higher, but it has to be with lighter volume. Okay? Well, no, yes, you go higher, you have lighter volume. The break topside, folks, it can just keep going, no doubt about that. What does happen is this. Now, the correlation. It can't handle it. Why? Because it's distribution at highs. There's no one in the store. People are buying the product. They're all excited. History repeats again. How does it repeat again? You stop pulling down with higher volume. That's what we did today. Once you get back inside the range, that won't stop in the middle of the range. When you bust out one side of the range, guess what? You would go down and you try to bust out the other side of the range. In this particular case, that's 1,000 points down in the DAX. That would be meaningful, no doubt. Now, let's go over to our own S&Ps. Why? Because in both of those cases, you're talking about the February 5th lows. when we look at where the S&P is right now, just look at the SPY, it's pretty intense. Yet we're at 195. The expansion up was dramatic beyond belief. 195, you're talking 173. That's intense. So how, and okay, so stay there. Because what you also have is the range, to get back inside the range first, is also quite a way down, where it would be 189.70. If we bring you to the SPX, the cash S&P, long way down, just to get back inside the range. We're at 1943, it would be 1897, you know. So we haven't had movements like that since, well, I guess in April we did, yeah. It's pretty amazing, actually, yeah. Yeah, we did. Yeah, in April we went from that 1897 down to 1814. The one in February was pretty intense too. And you know, as John Logan was saying, there are many equities. Well, there are many top dog equities that have not come back up. You know, let's go over to Amazon for a second. No, actually, you know, I want to go back to Boeing for a second, because this is a nice setup. This is a nice setup to sell. Boeing, on a daily basis, what you did is this. Boeing, January went from 144 down to 118. You come down with huge volume. We filled the gap Monday with 2.5 million versus 19 million, and then you had 5.5 come in today. That's a big number. That's on the technical basis. With the fundamental basis, I suspect what that's all about is the aspect of Airbus losing a huge order. Now, so watch this. Airbus suffered its biggest loss ever when Gulf Air Emirates canceled the deal for the A350 plane, valued at $16 billion. $16 billion. Okay? This is a deal that was struck in 2007. I guess they had a way out of it. Bottom line, they took their way out of it. That's the first part. Second part, when you take a look at that, it's like, okay, you know, what does that particularly mean? Well, more than likely, that means slower growth. You know, that's how that's shaken out. One of the stories out here today, though, is that Eric Cantor, bottom line, he lost in a huge way. He was a big supporter of the Import-Export Bank. The Import-Export Bank, folks, is corporate America's welfare system. That's what it comes down to. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it, step into it, take ownership of it, fly with it. You stay right there, folks. Allie and I are going to be coming right back. Have a great one, folks.